Good morning. Can somebody give me a message in the chat that you can hear me and that you can see my screen so we can get this party started? All right. Can you guys hear me? Hello? Hello? Can you hear me? All right, if you guys can hear me, just type it in the chat. If not, I'm going to continue going on with my workflow and we'll go from there. So I am trying to hook this up to Twitter X. I want to see how that looks. That way more people can get building the highest statistical edge. Okay, so it is showing up. Awesome. It shows 12 people. All right, so you can hear me. Thank you, Sci-Fi Trader. All right, starting off with the daily chart, right? Looking only at previous month 50% in NFP Friday, right? We can see that we're above both, right? So we can expect it in the month higher. Last time we got below it, we were targeting quarterly lows. We met that achievement here. We're above previous month 50%, which happens in this case to align up with that NFP Friday, so we can expect higher prices for the month. Going to the weekly chart, we can see that we made it our 0.25 or 0.3% to 5% threshold of pricing in. Once we hit that on the weekly chart of this constant variable line, right? Once we hit that, we expect a slowdown or a reversal. All right, so we've got that last week. Now above the constant variable, so we have the expectations, the max expectations to get up to here for the rest of the month. All right, because of with the daily chart, NFP Friday and previous month 50, we can expect lows of the days to be made at 5 o'clock to 11 o'clock in the morning. All right, moving on. All right, we're going to start with our time-based probabilities. We see multiple rejections. Well, first thing is what's the obvious clues using the previous day? Well, the obvious clues right now is this midline. We're above it. Let me change this to actual. Yep, that is the whole day's range. So this midline is previous day midline or halfback, CE, EQ, whatever we want to call it. That's 50% of Friday's range, and we can see that we're holding above it. All right, so that's the clue. Now we're going to put our time-based probabilities on here. First time-based probability, 1615. And that is settlement. Second one's going to be Globex Open. I got a new mouse and I hate it. My dog chewed up my other mouse. My daughter needed a mouse, so she got the good one. So now I'm going to have to buy a new one because this mouse is not going to work. And midnight. So we put our 3 time-based probabilities on the charts. Midnight settlement, Globex open. Now we're going to put our structure-based probabilities on. Highest high, the lowest low between 1800 and 06. Right? 1800 high happened at 1945. And it has an 86% probability to being returned to. You hear snoring, that's my English bulldogs. They say good morning. They're freaking wild childs. Alright, now we're going to put a secondary structure on, which is the lowest low between 1800 and 16. And what do we notice? We notice we have this low, and this is supposed to be on the 15-minute chart. My apologies. And all of these lows that have probabilities of being returned to by 8 o'clock, or between 8 and the end of the day. All right, so we have 230 that has 84% probability, and we have 1815, which has an 82% probability as well. And then if I went to this one, 3 o'clock, that has a 78%. 315 has 75. 330 has a 75. 345 has a 79. 4 o'clock has a 78, and so forth. Like this 445 has an 81. This 515 has an 82. So this is what trendline liquidity looks like. You know, for the ICT community that says trendline liquidity. So for ICT communities, this should be a juicy setup for a long here, right? You have this trendline liquidity, you have these relative equal lows, you just have to wait for the timing of it to come down to go up, right? All right, so we put our time-based probabilities, midnight, settlement, Globex on our charts. We put our structure-based probabilities, right, which we just went over, all right? While we're looking at the structure-based probabilities, right, this is how do you trade that, right? Right, so you can see on this day, what did we do? We went low to firecracker high. On this day, you went low to firecracker high. On this day, you went low to firecracker higher. On this day, you can make it below it, but look at the probabilities. Remember every 15-minute bar between 1800 and 06. No. So I went through and I collected 3,000 days worth of every 15-minute candle in the day. And so I have that. But you can use the midnight snap to, and then I build a PowerPoint cheat sheet. And you can do the same thing with midnight snap data. So this one, right, didn't reach the bottom, but it did take out every single probability except for this single point right here, and then we reversed, right? So this one made it to the halfway point and reversed. This one made it high and then reversed, right? So how can we effectively trade that? Well, let's talk about it. Right, what I have highlighted here, this red box, right here, this is the hourly captain's hours, and the red box is the 1800 to 06. So right now, we know that these hourly boxes are designed specifically for us to identify the market condition we're in and align a risk profile with it. So as we approach here, right? And we have statistics saying that this is a high probability reversal area, and we have to. It's 9:30 in the morning, and we have 8 hours, 6 hours to get 10 micro contracts out the gate, right? Well, we think that this hour is a high probability reversal, right? Then we know that we can engage 2 micros here, right? So let's retrade this, right? So this is that structure, this red box is the structured probabilities that we're talking about. We have to, number one, sit on our hands until the reversal. So this is the alert of the reversal. But every alert has to have a confirmation, right? So now I'm being alerted to expect a possible reversal. So for it to be a confirmation, we need to step above this RS59 box and find footing at the high, midpoint, low, or this previous hour, this hour's mid, right? We step above, and we're just waiting to come back and find footing. And it's not going to find footing. Actually, this was the footing here. So let's play this out like we rushed into it, and we bought in premium. Let me put this on micros. Also, pay attention to what time of the day this happened. 9:30 exactly. Right. So we had a reversal here, but for the younger traders, I want to get you guys focused on the alert and a solid confirmation. So let's say we rushed into our 2 micros out of 10 right here, and we bought 2 right here. And now we're expecting a new hour to start in 1 minute, and our cost allowance is 750. Remember, I use stops completely different. Like I'll stop myself out. This is only here in case of, that's like my circuit breaker, right? Right, to make sure that if something comes into these markets that crash the markets, the max I can lose is 750, right? But I will adjust my positions throughout the whole day using these hourly boxes. I'll add to, take away, all that stuff, right? So there's that. So right now we came down, max we had risk was $218 on this move, right? On 1 minute we closed above the previous hour mid, right? So now we're waiting for the 5-9 box to develop. Now the 5-9 box is developing, and we're above previous hour mid. All right. So now we know that this was a possible reversal right here. Remember, I told you guys between 9:30 and 10:30, you guys always should be measuring the 50%. And the moment this 50% is bridged, get the trend day out of your brain, right? Understand that it's probably going to be more a V-shaped puke day and go for the rest of the RTH, meaning tighter ranges, meaning that we're not going to just shoot off to the moon or drop down to the hell. The one criteria I've been able to identify for RTH being a trend versus a V-shaped puke or inverse V-shaped puke is this midpoint as it's developing. 10 o'clock. So this whole day, I was positioning into this whole up move for a trend day. Well, this 10 o'clock news candle came out, wicked down, breached that 50% mark, and I said at that point, my expectation management is that we're not going to have a trend day. So I continue to trade these hourly boxes with the expectation that each 15-minute candle, like I just had to stay in flow with the 15-minute candle, right? And so far, 9:45, right here, these are my two 15-minute candles. Since I see that the 15-minute candles are going above each other, right? No, it hasn't yet. Why isn't this updating? Oh, I guess I have to keep going. focus your attention back on the 5-9 boxes. Right here, you could add it 2 more, right? Because why? What market clues they give us? We've taken out previous hour highs. We've found footing on previous hour midpoints. So somewhere in this 5-9 box, as it's developing, you can add to this position. And since we're hindsight trading, I like to do it in the worst possible scenario. So like we put our 2 positions on the reversal hour right here. And now we're going to add to the trend and buy 2 more. What the hell? No, get out of here. Right there. Move my cost allowance up to 750. Let it keep going. And at this point, we're paying attention to this previous hour mid. We're allowed to have noise in here, but we're paying attention to this previous hour mid. Are we holding it? Right? We really haven't stepped up. Well, we've stepped above 1, 2 times the 5-9 box, and we're finding footing right here at the low. Right here, if this continues up past the midpoint at the low, we found footing at the midpoint right here and right here. So just because price is doing this weird shit on the 1 minute doesn't mean our overall thesis for the day is wrong. Now our overall thesis for the day is wrong. So now my job is to get out of this position because we breached our rules, right? So what happened? We came back up. This was the return to the 930 open, because remember I told you we'd like to return to the 930 open, and since we already breached this 930 to 1030 midpoint, we can expect our 15-minute bars to be a V-shape and puke kind of day, right? And then you just ride hour or 15-minute by 15-minute, you make decisions. Because what you're trying to look for at this time, right, from 930 to 1600, we know that that is the highest probable day time frame for a trend for the day. So that right there, and our job is to identify, is this going to be a trend day or a V-shaped puke day, right? A V-shaped puke day. All right, moving back to what we were doing. I got sidetracked. All right, so now that we've put our time-based probabilities, our structure-based probabilities, we're going to put our projection-based probabilities on. So using DRs or ICT kilozones, however you need to find the probabilities, right? You need to find a way to say, if Asia did this and London did this, what's the probability of the 930 to 1030 and the 1030 on, using these variables, right? So right now, we see, let me get my database reset. I need to fix my screens. This is driving me crazy. My daughter had to do homework all weekend on my computer, and she's completely messed up my setups, which is fine. Because I'd rather her do homework the way she needs to than for me to complain about. It's just a blessing to have a kid in my house doing homework and messing up my computer screens. Okay, NQ. So remember we talked about this a bunch, right? What is Asia doing? So Asia right here, this is the ADR range for the DR traders. This is the Asian kill zone for the ICT traders. I choose to use DR because it has 1930 to 2030 and then variable in action afterwards, right? That I can measure data around and pull probabilities around. We can see that Asia went short and did not breach the other side of it. So what is that telling us? That's telling us out of 4,230 days, and if we put Asia went short and stayed true. That brings us down to that happened in 1,350 days. Now the next thing. All right, we're not even talking about power right now. Now we can say this midline of Asia, was it breached from 2 to 3 o'clock, or was it breached from 3 to 8:30? And right now we can see it was breached between 3 and 8:30. So those are things that live price is confirming. Live price is telling us this is what's happened. Filter this only, right? So just out of those three variables, we have 985 days left. Now we're going to put in what has London done so far. What London, oh wow, would you look at that? 6 o'clock's going to open, the new 12-hour cycle is going to open at the 50% of the range. There's something there, I'm telling you. I've seen it too many times. All right, so far, the London, or the ODR for the DR traders, the has went long, right? So we can put that. So now we have 593 out of 4,230 days. Now we have only 593 days that have done this so far, right? So now let's draw our scenarios. Scenario. I got this new keyboard. Everything's all weird on me. All right. Scenario 1 is London low holds, and then that will lead to New York above, New York engulfs, New York below, right? So if that's the case, right, this is scenario 1. All right, if we stay with scenario 1, 9:30 to 10:30 being New York above. God damn it. Fuck. All right, it will be 41%, 12, so 53 plus 11, 64. So there's a 64% probability that New York's going to be above as long as we hold that London low. It'll be 23% that we engulf, and it will be 5, 5, 3. So 13%. All right, scenario 2 is London low breached, right? Meaning between now and 8:30, right? This London low gets breached, right? Which that London low is right here from 3 to 4 o'clock. That low right here, right? So now we're going to say that that has happened. And now we're going to put New York above, New York engulfs, New York below. And real quick, so out of 4,230 days, this scenario, along with what Asia has happened, has only happened 115 days. Scenario 1, where that London held true, out of 4,230 days, that held true 478 of those days, based off of what Asia's done so far and based off of what London's done. All right, going back to this London low being breached. There's a 23, 13, so 26. 26 plus 11, so 37. There's a 37% that we open below. There is a 23% that we engulf. And there is 16, 7, 16, 7, 23, and 23 plus 6, so 29% that we stay above. All right. So what does that mean? That means 9:30 to 10:30. Let me do one thing so I can explain this where it makes sense to you guys. All right, looking at just this, we're going to say that this is 9:30 to 10:30. Right. Right now, between now and 8:30, right? If this low right here holds from London's kill zone, right? Any stats we can add for them, like any hourly opens, London mid, Asia mid. Yes, I found so. If you plus, thanks, bet. Yeah. All right. So now, right? If this low from the London kill zone breaches, that is scenario 2 between now and 8:30. If this London low holds between now and 8:30, that's scenario 1. Either way, what do I mean by above it? I mean that 9:30 to 10:30 can either go like this, holding this low, holding the mid, or being above. What do I mean by engulf? At 9:30 and 10:30 engulfs this 3 to 4 o'clock range. What do I mean by below? That 9:30 cannot get above this high, or finds resistance above the mid, or just is straight below it, right? So there's that. And before we move on, we're going to erase this. I'm going to put this back on. We're going to go to our opening range stat, which tells us the average opening range from 9:30 to 10:30, right, over the last 10 days. And we can see that we moved 182 handles on average from 9:30 to 10:30 over the last 10 days. So that much. You guys have to realize we've only moved 17% of our average daily range right now. So this looks extreme, but it's not. All right. Now we're going to do our projection-based probabilities, right? Based off of this Asia. VR traders do Asia projections. ICT people do different projections. They use either the flout or just whatever, right? A structure point projection. I'm using the projections off of Asia, right? ICT tells you guys to use projections off the central bank dealing range and expect to take out 2.2 standard deviations on one side to make 4 standard deviations on the other side by 11:15. Whichever way you do, just repeat it over and over and over again, right? And collect data on it and make this, because you want to make decisions around it. You don't want to keep switching your stuff up. All right, so now we're going to put that on. Right, and now based off of these Asia and London variables, right, we're going to put those probabilities on our charts. Right, so right here, because Asia went short and it was true, and London went long and it hasn't breached yet, we're going to put 19,564, and this has an 88% probability. Previous day's highs at 19,598, and that now has a 71% probability. this right here, 19653, now has a 48% probability of being hit. And then 19721 has a 33% probability of being hit. Now we're going to go lower with it. And they're just different standard deviations, right? So now we're going to put the lower targets in. 19464, right, has a 92% probability of being hit, which makes sense based off of what we know. We know that this 12-hour probability where we pulled our structural statistics have high probabilities of being hit. And then reversing this one down below us, 19409 has a 69%. How did we get the 88% probability? What 88% probability? Which one? This one right here? So we took what Asia did. So Asia went short and stayed true, maintaining this 1930 to 2030 high. The integrity never got breached. We said London from 3 to 4. After that, we went long, breached the Asia mid, and now we're determining if we're going to have a false day or true day. Well, anyway, I collected the data for this, 4,280 days worth, and now I just use those two variables of what Asia did and what London did, and it's giving me the projection probabilities of these levels. So it's a live based data probability. All right. So now right here, $19,342, that has a 44% probability. And then the last one has, wait a minute. Ooh, okay, so this one actually has a 66%, 69%, because the first projection's already been hit to the downside. So this has a 69. This has a 44. I gotta get used to this new keyboard. And this actually has a 26. And then if we breach this low right here, now to 930, all these probabilities shift, and you'll notice, right? Like if we, right now it's neutral, it's saying that I want to see all these projection-based probabilities based off of true and false, right? But if we breach this London low before 8:30, this turns into 79%. This turns into 54%. This turns into 32%. Right? All right. These are the scenarios. This is what our 9:30 to 10:30 range looks based off of the range. Now we have to anchor it. And it's safe to assume that we're going to come down to this structure base 86 and this projection base 69. And when does that happen? Between now and 10:30, right? Now what we're going to do is we're going to get our average daily range, our average 10-day range. See, we've only moved 16.2% over the average range, right? So now we're going to draw that out. Our average 10-day range is 414. Right there. Okay, now we're going to get our time-based ranges, right? So it's a Monday. Out of the last 44 Mondays, the average range from 4 to 8 o'clock is 0.39%. The average range between 8 o'clock and 12 o'clock out of the last 43 Mondays is 88%. And the average 12 to 1600 is 0.71 out of the last 43 Mondays. This is how you manage expectations and what to expect within the time frame you're in and when you're in a train. So if it's between 12 and, or if it's between 8 and 1600 and we've already met this criteria of 0.88% on a Monday, like how much sense does it make? Maybe we should think about trimming off some of that position, especially if we bridge the midpoint of the 930 to 1030 range. So now we're going to place these. We're going to first place our 4 to 8 range, which this is the 415 high. So we're going to anchor it off of that. That's how much low we have. Oh, wow. It just magically appears that time. All right, drag it out to 8 o'clock. This is at 4 o'clock. So right here, this is our average range. So we have this much of it from 4 to 8 to facilitate still before we go and we start hitting anomalies. Where can we go to get the indicator used to calculate the live probabilities? I'm not sure if I understand what you're asking there. Are you talking about for the projection-based probabilities, the structure-based probabilities, or the time-based probabilities? Or getting these distros? I'm currently building one. If you're talking about what Asia, being able to incorporate the variables and get the probabilities based off of what Asia did and what London did, I'm currently working with coders to build that so nobody needs a database for it. Always wanted to ask, if I gather the model data, I'm assuming you added another data point for the percentile of ADR standard deviation projections to your database. Aaron James, I'm going to have to read that one more time. Always wanted to ask, if I gathered the model data, I'm assuming you added another data point for the percentile of ADR standard deviation. Yes, yes, yes. That's what we're pulling. That's how we're able to get these projection-based probabilities based off of the variables that London and Asia has done. All right. So now we're going to put in, this is the afternoon. Okay. So now we can see that price is more than likely going to meet the statistic right here, right? Before 8:30, unless we just do a magical V-shaped recovery, which go into our hourly charts. Why are my captain boxes all jacked up? Either way, it's not going to. Captain boxes. Why is this not working? Let me save and reload. Anyway, let's just continue. So now we see that we have breached now London. What has London done? If Asia, let me hide all drawings, right? If Asia was short and maintained the integrity of the 1930-2030 high, and now London went long, breached the midpoint, and now has maintained the integrity, has breached the integrity of this Asia low, right? Now we have the actual correct, like we had the actual correct formation, and we don't have to wait till 8:30, right? And right now, we went with scenario 2. Scenario 2 is now in play. Now we have all the probabilities for scenario 2, right? And now we have more data because they just showed their hand, right? So let's put our drawings back on. We know that scenario 2, right? If London low is breached, right, which only has happened 115 out of 4,230 days based off what Asia and London has done so far, scenario 2 has breached. We know that 9:30 to 10:30 has a 29% chance of being above London, and 23% probability of engulfing London, and now a 37% probability of being below London. Give me 1 second. And now here's the cool thing. We have a 51% chance of being long from 10:30 to 1600. No. And now, if I can get my hourly boxes to work, like we can also build a starter position. Okay. I might have to redo this. Now we have breached and met the 86 probability of the structure stat. Remember, where did the structure stat come from? The high or the and the low of the 18 on the 15-minute chart of the 1800 to 06 high and low, right? And we have the probabilities for that. Right now, let me put this box back on. Captain boxes right here. And I need the midline to appear. Okay, so we know that we just violated. Let me turn this off. Let me turn the drawings off. So we know that we just violated the 1800 to 06, right? And we are expecting that for a high probability reversal here. Price has to, now we can enter like a fourth of our, TP. We can hit a fourth of our position. So if we're engaging all day, we have 10 micro contracts on the NQ to engage with, right? And we know that we just took out our high probability, 86% probability, right there. And we know that there's an 82% probability to come up to these highs right here, right? And we're trying to get in that. 2 of those contracts can be released or be entered in right around here. But we want to wait for the step above the 5-9 box and find footing on the high, mid, or low of that. And then the next hour, as long as we're above this previous hour mid, we can enter 4 micro contracts. In the next hour, 3 micro contracts, and we can add to the trend, right? All right, so going back to this and finishing putting in our high probability trade for the day on, right? We know we have this, and now the closer we get to 9:30 to 10:30, the more obvious it will be which one this one is going to respect. Is New York going to be above, engulf, or below? Right now, there's a 23% probability because we haven't taken out previous day's highs or lows. We don't know where momentum is going. We do have understanding that momentum for the 4-hour candle, which started at, there's plenty of videos from last week where I explained the 5-9 box, and then there's a whole article that I wrote around it. So we're going to finish putting the high probability trade on, and then you just show up every day, and I cover it usually once a week in recap videos. All right, so now we know that H4 momentum is now down. However, we've already seen plenty of times where H4 momentum can go lower, just to reverse. You go lower, just to reverse. Once we break structure 1, to go higher, to reverse. All right? The problem is that momentum, where we went lower or higher, especially in these cases, happened later on in the session. This happened at 9:45, not at 6. This happened at 9:30, not at 6. So we can safely assume that this momentum will continue down until closer to the open. I'm going to say, right, based off of my knowledge of how markets operate, that New York, the highest probable based off the price action, we're going to go with New York 23% engulf in London from 9:30 to 10:30. Meaning, like, we go lower. Well, where are we going to go lower at? We're going to target this 44% probability range right here. And then, because based off of what we do on the higher time frame and all that, we can anticipate a higher close, right? And we're going to say that higher close will come in, well, obviously it has to come in the afternoon session, will look like such, right? Between 12 and 1600, right? Meaning that if this plays out the way it does, there's part of our average daily range unaccounted for. So if I layer the average 10-day range on top of this, right, there's parts of momentum that is unaccounted for. This section right here and this section right here. And throughout the day, you have to piece it together, right? Because it's a puzzle, right? So that's wild that the 9:30 to, so the first part of the puzzle that we can probably unlock is that the 9:30 to 10:30 range won't be as big as it has been on the last 10 days. All right. So now we know that there's a high probability, if we're going to reverse, right, that it will be between this 44% and the 69%, right? If we cannot reverse that, momentum is going lower for the day, meaning that we'll more than likely close lower for the day, right? Because if we breach this level, momentum has shifted, right? And we can expect to close like this, right? That's why it's important to pay attention to this hour and the next hour to see if this was just a run on this liquidity, or not on this liquidity, on these lows right here under structure stat 1, and then we reverse to come get this 86% and this 88%, or does that happen at the 9:30 to 10:30? But with that being said, I am going to have to jump. I still have to write an article, wake my daughter up for bed, and go into the office today. So hopefully this was helpful. You look up my Substack. It's on my Substack. All right. So with that being said, I do have to jump. I have trades I have to put on for competition, and I have to wake my daughter up and get ready for work, all within the next 30 minutes. So I am going to jump. All right. Later. Keep showing up. Found